Hello, everybody. Welcome to Trading the Close. My name is Drew Dosick, and today we saw a market rally relief because the tensions in the Middle East, for now, appear to have been cooled. We'll see how long that lasts, but the markets and investors are rejoicing, currently pushing price higher up on the markets. Really phenomenal. So let's look into the market summary here and choose and see what's going on with the indices that we see here on the charts. We have the Dow Jones moving up 1.23%. And then we also have NASDAQ up 1.5%, S&P 500 up 1.17%, U.S. oil retreating off of that Middle East tension conflict easing. And then gold also pulling back 1.39%, and Bitcoin staying flat, roughly up 0.1%. So let's jump into the heat map, and we see here with an update on the markets, we have a lot of green on the screen. Now, Tesla did see a little bit of pressure today that was pulling back, but did also have some very good gains over the last couple days pushing up. So that's to be expected, or at least understood. But we have all these other chip players and big tech stocks pushing higher. Meta pushing up near the gap fill. We'll take a look at that chart here in a little bit. AVGO made all brand new all-time highs here today, up 3.9%. Oracle up 4%. Netflix continues to defy gravity as well. So let's jump into the SPX. So a couple things to note here, folks. We did and are closing above this pivot high that occurred on Wednesday, June 11th. So that now opens the door for further upside with the all-time highs on the S&P 500 on this trend line clearly within reach now. You can see we're not that far away, roughly about 54 points away currently, which looks like we're running into the close at the moment. So truly remarkable move here on the S&P 500, folks. This has been one of those moves that continues to surprise me, albeit because we have a lot of headwinds facing us. Yesterday, we had apparently the conflict easing, but we still have tariffs. It's almost like people have forgotten about tariffs and the impacts that they're going to have with businesses and consumers here in the United States. We also do have GDP being reduced over and over and over. So far reduced from 2.1 to 1.7, now down to 1.4 on the outlook. This is all not really lining up with the markets pushing to brand new all-time highs. Yet here we are. And so we're going to get into some charts and show you where there's some good resistance levels that are already poking up right near these pivot highs. All right, so let's flip over to the Qs here. You can see here today, 540.81 is the all-time highs, and we got as high as 540.70. Just missed that all-time highs by 11 cents. Really remarkable push here on the Qs, but the SMH even bigger, folks. And remember, if you guys recall, back here on February 20th, that was where the S&P 500 and the Qs were making brand new all-time highs, and then the SMH already got to that level when price consolidated in this area, and then now we're pushing higher. So this leads me to believe the S&P 500 and the Qs will tag those all-time highs, Qs being so much closer, but with the SMH leading higher, this is very positive. Yesterday on Trading the Close, I was discussing how this wasn't the best of candles because this inclining trend line on a third hit for bulls, you want to see this hit produce a great bounce, much like what we're experiencing today. But yesterday didn't give it to us at all. As a matter of fact, we closed underneath that trend line. So that was opening the door for potential breakdown possibilities. But we did not see that today. We just saw investors rallying off of this good news coming out of the Middle East that the tension is cooling down. So very next stop on SMH is going to be this area, this inclining parallel channel, right about 283.52 if we continue pushing higher like that. IWM also had a great bounce up, gap up day today, pushing higher, not quite getting to this pivot high. That's going to be minor resistance right at 215.96. But the next major area of resistance on the IWM, this is smaller cap stocks, it's going to be right around 221. Next up, we've got Bitcoin. Now, Bitcoin, I highlighted yesterday this amazing parallel channel that's really given us a wealth of information as to how price action is likely going to behave when Bitcoin is in this range. So right now we see that price has dropped down Sunday, tagged this area of support perfectly right at the bottom end of this parallel, and has since bounced up. And then yesterday pushed through this inclining resistance trend line too. So that tells us the next stop for Bitcoin is going to be this 50% area of the parallel. And notice too, this declining trend line right here, and they all converge right here at $108,637. So if price meanders, bull flags for a few days, and then starts pushing up, that's where we're going to see a lot of resistance on the chart of Bitcoin. And if we break that, that also tells us Bitcoin is very, very strong. But watch this area for major resistance in the near future for Bitcoin. Into gold. Gold starts retreating too with the conflict easing. Does make sense. First area of support is going to be this declining top end of the parallel channel right here, roughly around 32.45. If we get down and meet right in that area. Why I like that area too is because of this inclining yellow trend line will likely converge right in that spot. Much like we saw on the previous chart of Bitcoin, we have two different areas of support that are converging right here that likely will be a cradle to catch the price for gold, at least for the near term. And one of the main reasons gold is not pushing up to new highs, even with that conflict and the tension that was going on, was again because of this daily topping tail and the weekly topping tail. That's how strong those signals are when they appear on the charts at the highs of the charts. It really forces price down on the charts and really requires an awful lot of momentum to break through. Now, can they get broken? Absolutely. Trend lines are broken all the time, but they tell us a lot of information when that break occurs. Next up, we've got silver. Silver retreating a little bit, but notice every time price has gotten down here right around $35.50, price has been bought up right there. Investors step up and push the price back up higher. So this is all just bullish consolidation for the time frame. We still could pull back down to this trend line at $34.86 for support for silver, which would be a buying opportunity for the move up on the measured move up to $38.97. Into U.S. oil, look at this collapse in U.S. oil over the last couple of days. Right here yesterday, I was talking about this yesterday afternoon during trading the close, seeing this mammoth drop on oil. And this was before any news was released on a potential ceasefire. I was saying, guys, the charts right here are telling me this conflict is over. And plus, the Strait of Hormuz is likely not going to be blocked because that has a lot of oil flow over into China. So that chart, reading the charts can help you predict what's about to happen. Now, likely scenario is a lot of people caught wind of this development and people started selling oil. But clearly right here on the screen, you can see oil just dropped down tremendously, caught a little bit of support here in this area, 66.48. But now today, we just went straight through that support area, caught support at the next area, 63.86. So if oil continues selling off, notice how we're stair-stepping down into each one of these support areas. The very next support area will be this declining trend line right here at $62.61. Followed by the previous neckline of this inverse head and shoulders pattern, which is slightly lower, right around $61.56. And it all depends on the timing of when price gets in there, as both of these lines are declining on the chart. Next up, we got Nat Gas. You see Nat Gas had 3 nice selling days here on the charts, coming right into this inclining area of support. So right now, this is going to be minor support for natural gas, and we'll see if the selling pressure persists. Next area support is going to be $3.38, followed by $3.13. Into the DXY. Now, the DXY also did fall down again today, but notice where price action stopped. It stopped right here on this declining trend line. So a lot of things are involved with the US dollar. Temporarily, you can say when the dollar goes down, the markets like to go up. But that's only true for a certain period of time. If we have a big fall on the dollar like we've seen this year, all of 25 has basically been down on the charts. That will enable our dollar to not go as far, right? So we won't be able to buy foreign goods as well as we could when the dollar is all the way up here, getting us better buying power here in the United States. So with the reduced dollar, that could actually cause inflation on products that are imported, tag on tariffs, and now that's a recipe for much higher costs and lower demand for certain products being shipped in from out of the country. We'll watch to see if this declining trend line is broken. If that is the case, next support area is going to be down here at $94.93, sub $95 there on the DXY. Next up, Mobileye. This is just a quick follow-up from yesterday. We did highlight how we had an inverse head and shoulders pattern that was developed here on the charts. We have the left shoulder, the head, and then the right shoulder. And notice today, Mobileye broke out, did a fantastic job of moving higher, bringing this inverse head and shoulders pattern measured move to 2349 more in reach. Now, we need to see a confirming move above today's high tomorrow or in subsequent trading days. That will then flip this neckline into major support and then would be an awesome buying opportunity for the completion of this measured move. Now, keep in mind, the moves up will have pauses, potential pullbacks too. Notice this area right here, we have pivot highs that all correspond with previous pivot highs. There's also some chop action right here. That will likely be an area of resistance right about $19.22. Then the next area of resistance will be the double top at $22.51. Finally, the target will be $23.49 once we confirm this breakout that has occurred on Mobileye. Into Coinbase. This is one of the leaders in the S&P 500 today, folks. You can see here we've had a monumental move up the last 4 trading days. We were down here at 253.09, now currently trading 344.75. Incredible move on Coinbase. If I scroll back out on the chart, though, you can see we're starting to hit some long-term resistance trend lines on the chart. This pivot high from back in 2021 strung out through the pivot high that had occurred in December of 24. And then you can see right now today, price action ran right into that trend line and has had some problems getting through it, at least for the time being. Fantastic move there on Coinbase. Now we go back to the daily chart and then bring your attention down here to the RSI. You can see on the daily RSI, we're above 70, which equals overbought. But then also, if you look back here on the chart on May 25th, we were above 72. But now price is above that area. So that while this isn't divergence because price is starting to push higher, it's just relative speaking, like with the RSI was at peaks above 70 here, it cooled off, and then now we're peaking above 70 all the way up here. It's telling me that Coinbase is becoming exhausted with this move. Now, can we poke up a little bit higher through here? Absolutely. We can still pierce through here, but it looks like Coinbase needs to have a little bit of a cooling off period coming down and or at least consolidating right around this trend line before making an attempt to move higher. Any pullbacks down to this trend line could be, and it would be a little bit more aggressive, but it could be a buying opportunity. More conservative buying opportunity would be a pullback down to 298.14, and this trend line for reference is at 323.78. Next up, AVGO accomplished brand new all-time highs today, pushing up to as a high of 265.87. Very nice move for this stock. However, notice what's going on this chart. So, and I bring your attention to this inclining trend line right here, all right? We had price break above, and then it failed that breakout. Now we're coming back up and retesting that trend line of which was a failed breakout. My eyes are going to be all over this in the coming days. Are we going to break above this, or are we then going to start collapsing down? Plus, notice we've got some divergence on the RSI down here. This divergence doesn't imply an immediate sell-off, but it implies that one is near around the corner. So we should be, and when I say sell-off, just a simple correction down here, potentially to the 234, 235 range, where we have an awful lot of support. A small minor sell-off will just bring us right back down to the top end of this parallel. But right here, this data on the charts, with this sort of break and price action coming into the resistance at the trend line that you see where price stopped going up today, all tells me the likelihood for AVGO to go down is higher in the near term than going up. All right, next up, we've got Amazon. Amazon here, you see, has been putting in bullish consolidation over the last week and a half of trading. This bullish consolidation has a measured move up here to 228.31. Now, as long as price stays above this inclining parallel, this is the likely scenario that will play out. But also, you've got to keep in mind this inclining trend line right here connected from pivot high on March 25th, or pardon me, pivot high on March 25th, and then the pivot high on May 13th. Both of those areas strung together create the next area of resistance on the charts. And notice how they both converge right over here, a little bit further away, right at 228.31. So that's going to be the spot I'm looking at Amazon for resistance and a potential pullback after it goes up. If you see here, we don't have the same divergence that we had on the RSI for AVGO that we do on Amazon. So Amazon has more of an opportunity to go up higher in the near term than AVGO. Next up, Meta. Now, Meta, notice down here on the RSI, since we just spoke about it, we do have some divergence going on here on Meta. Plus, I've highlighted this gap fill for several weeks now, and really before this consolidation occurred. This gap fill will be resistance on Meta. It's at 716.37, although it's been weakened a little bit just because we've been consolidating right underneath that level. So for me, the next area of resistance that I would be targeting for, say, a day trade on Meta would be this inclining parallel channel. And notice how the price action comes right in between all these candles right up here. It's almost going to be like a hidden resistance unless you knew how to draw parallel channels. That area will be resistance currently right around 728.03. So both the gap fill here at 716.37 and then 728.03 at the parallel breach right there. Next up, GEV. Now, a lot of people have been interested in power plays, and it's very displayed here on the chart of GEV, especially when you're talking about these AI data centers. They require so much energy to run. So there's been a lot of investors piling into nuclear plays. I even saw an article today talking about, is now the good time to invest in nuclear power? And here are the stocks you want to buy. And really, when these news articles come out, folks, you've got to understand technical analysis. Can this chart and the stock price go higher? Yes, it absolutely can. But usually when those articles are put out, the stock has already run so much, it needs to either consolidate or pull back before it can go higher. So they're using folks like you and not necessarily trying to play it that way, but all these other individuals, retail investors that read these articles are going to be buying these stocks while other investors are exiting because the run up has already been tremendous. And it's clearly displayed right here on GEV. Also, look at this inclining parallel channel. We are starting to breach the top end of that. Over the next couple of days, we could still poke above, but notice the RSI divergence here on this chart too. So we have several of these charts showing RSI divergence right at the top of charts, right near resistance. Even though all-time highs are right on the edge, we're very much in view. It's still looking like we need to have some sort of sell-off or even pause and consolidation before we can start pushing higher. And notice what would happen if we had consolidation on GEV. We'd have consolidation, say, down in this manner, and then this trend line is extended further, allowing more room for the stock to run up higher. But at the current situation, it looks like we need to have a little cool off period and pull back. First area of support, notice here this pivot high as well as this pivot. They all correspond right around 444.70. That would be a good entry area on GEV if you have any aggressive long opportunities in your portfolio. Otherwise, you could wait for the middle area of this parallel channel, which currently is right around 410, just slightly lower. That would be a more conservative spot to enter. All right, guys, that wraps up Trading the Close. Thank you guys so much for tuning in. My name is Drew Dosick. I'll be back here on the charts giving you guys more data tomorrow. Until then, you guys have a great day.